What's up, you guys? Welcome back to the channel. In today's video, we're going to take a look at why NIO continues to pull back, despite them being up slightly today, but overall why they continue to pull back and why they're trading in the mid $14 range right now. And then we'll also go over some of the fundamentals behind NIO's business model and when they could possibly become profitable. But before we actually get into the video, for those of you who are new here, my name is Evan and I make videos that show you guys different ways of making money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these video updates. Now, if you guys have been watching NIO over the last couple trading days, you know they dropped from about $17 last Friday all the way into the $14 range yesterday. They closed out the trading day at about $14.10 yesterday, and then after the market opened this morning, they saw a low of $13.01. So they almost got below that $13 range. And right now they're trading at about $14.80 and they're kind of stabilizing around that range. And they're actually up 4.5, almost 4.6% on the day. But overall, NIO has just been dropping like a rock recently. And there's a couple of reasons that we're going to go over as to why this is happening. So first off, investors are actually running away from a lot of Chinese stocks right now because there's a potential fear of delisting off of US exchanges. The possibility comes from the Holding Foreign Companies Accountable Act, which became law in December of 2020, and it came into focus for investors last week after the SEC identified 5 different US listed American depository receipts of Chinese companies that actually failed to comply with the regulation. And for those of you who don't know, the law says that if foreign companies don't comply with proper auditing practices for 3 consecutive years, the shares can be delisted. Now, this doesn't mean that they will be delisted, it's just that they could be. And NIO wasn't even one of the names on this list. But even so, this fear has led to a lot of sell-offs in NIO shares, which is why they're almost down 40% in the last month of trading. And one other thing adding to the fear of NIO possibly being delisted is the fact that they just recently listed on the Hong Kong Stock Exchange last week. Many investors saw this as a way for the company to plan a potential delisting from US exchanges. Now, NIO hasn't yet confirmed whether they're going to apply the proper auditing procedures to avoid being targeted by the SEC, but they would have 3 years if identified by regulators as needing to do so. It's also worth noting that a new variant of the virus has been spreading in China, and this is leading to more lockdowns, and this has increased investor fear about stocks in the country as the wider lockdowns have taken place. And then the last thing to consider is actually what's going on between Russia and Ukraine right now. And some recent reports are claiming that Russia is seeking aid from China and that the country may assist Russia in what's going on over in Ukraine right now. And if this does end up happening and China does end up taking sides with Russia, it may result in sanctions on China as well. And if that happens, we can definitely expect several Chinese stocks, including NIO, to drop as investors flee the market. There's not going to be a lot of US investors if there's sanctions on China. So that's definitely a big thing to watch for, because if that does happen, you probably want to get out of your position or at least look into it more and see what you can do before there's sanctions not only on Russia but on China as well. Now, if we put aside what's happening right now in the world, including the new variant that's going around, as well as lockdowns in China and what's happening in Europe, the fundamentals of NIO haven't changed, and they don't seem to be in financial distress right now. They do have a lot of growth projects planned, and they're going to need additional cash for those projects, but right now they're not in financial distress, and it doesn't look like they're going down anytime soon. I think the word bankrupt gets thrown around a lot, and people think that NIO is going bankrupt just because their stock is dropping. But as I've mentioned, their stock is dropping due to outside factors that they can't directly influence. It's not like as if they had delivered 50% less vehicles month over month. That's something that directly affects NIO, but all these things that are happening are indirectly affecting a lot of stocks, including Chinese stocks specifically. And right now, NIO is continuing their production and model expansion in China, and they also unveiled the ET5 recently, which is their new mid-size sedan, and they're expecting to pick up general production in the second half of this year. And so again, if we don't take into consideration everything that's happening right now, it looks as though NIO is just beginning their high growth / production phase. And analysts are actually expecting to see a ramp up in sales by the end of 2024. And this is when they're expected to see 4 times their sales. And right now, NIO is still managing a relatively light operation, but they do plan to enter and increase their own production centers which is going to be a key in their development, and it's going to see whether management can turn NIO into a very successful business or into one that continues struggling to keep the lights on. And if we take a look at what 25 industry analysts are saying about NIO, the consensus is that the break-even point for NIO is near. They actually expect the company to post a final loss in 2022 before actually turning a profit in 2023. Now, if we work backwards from what analysts are estimating, it turns out that they expect the company to grow 94% year on year on average, which signals high confidence from these analysts. And obviously, if this rate turns out to be far too aggressive, the company is going to just become profitable much later. But right now, NIO is just beginning their ascent in the Chinese market. And with such a high demand right now for higher end EVs, this is where NIO can begin to shine, and this is where they're going to see those higher production numbers and where we're going to see them start putting out more deliveries. And they're actually expected to triple sales by the end of 2024. And that's also considering them becoming profitable by 2023. But there's one significant risk that we have to factor in, and this is the possible heating up of tensions between the East and the West. Nobody wants a slowdown in the economy, but there's definitely some possibilities that financial institutions are going to separate and investors are going to seem to factor in the risk in the current stock price. So it would become much more than fundamental performance of the stock, and it would be based on a lot of world events that are happening, just like we're seeing right now. Now, the unfortunate thing is that a risk like this is not easy to measure. We don't know how NIO is going to react if these world events continue happening, and if there's still a parts shortage, and if there's new variants that are happening with the virus. These are things that you can't predict, and you don't know exactly how a stock is going to react. But there is one thing that could maybe give you guys a lot of confidence when you're looking specifically at NIO, because if we compare them to Tesla, Tesla took about 10 years to break even and become profitable, where NIO is doing that in much less time if they do become profitable by next year. Well, I guess I shouldn't say in much less time, because NIO was actually founded in 2014. So it would only have taken them 9 years as opposed to 10 for Tesla. But this is just a good comparison to show you how NIO actually could compare to a company like Tesla. You guys probably are aware that Tesla grew substantially over the past couple of years, and they did a stock split as well, and then they continued going up. There was a lot of people that thought they were going to do another stock split, and I certainly wouldn't put it past them in the near future, because while Tesla does have slight pullbacks, they almost seem to always continue going back up. And it's pretty obvious that the EV market is going to be the market to be in the next 5 to 10 years, because that's where the push is going towards. A lot of countries are pushing for electric vehicles right now, and they want to get rid of normal combustion engines. So I guess there's two major things to be concerned with, and that's whether NIO could be delisted at some point, which right now they're not actually on the list of companies that were pointed out by the SEC. So I don't think it's a major concern right now, but it's still something to keep in mind and maybe look into and dive deeper into it. And then the second thing is what's going on in Europe. If China does side with Russia, that's definitely going to affect a lot of Chinese stocks. So especially keep those two things in mind if you guys are holding NIO shares or if you're looking to buy in at some point. Now, for those of you who made it this far into the video, I want you guys to leave a comment down in the comment section and let me know at what point you think NIO is going to become profitable. Also, if you guys enjoyed the video, make sure you leave a like because it really does help with the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one.